Before we go to the four panels, though, we're going to start, and I'm delighted to have as a guest here for conversation Huw van Steenis, who is now the Special Advisor to the Chief Executive Officer at UBS. He was previously the Senior Advisor to the Governor at the Bank of England, and the Governor commissioned him to prepare the Bank of England's Future of Finance report. We're going to take the opportunity to talk with Huw and get his insights from the great pieces that came from that report. So please join me in welcoming Huw van Steenis.
Am I in the wrong one?
That's all right. We should probably sit next to our names, but we'll find a way to work it out. So Huw, thanks very much for joining us. And I think, firstly, probably a good place for us to start is where the Governor made the decision to commission this. And I was wondering if perhaps, if we start there, what the motivations or the aspirations of the Bank of England and Governor Carney were in undertaking this piece of work.
Well, Brad, thank you very much indeed for having me, and thanks for coming along today. So the genesis of the work was a couple-fold. I think first, the Governor rightly understood that the pace of change in the industry from the impact of technology was accelerating, particularly around the area of payments. And I think number two, obviously before he moves on, wanted to leave a positive vision for finance and the role of the central bank at a time where, let's be honest, some of our political classes in the UK are somewhat distracted. And so we agreed that the work should really be grounded on three things. The first is, how can technology improve the resilience of the financial system? So it's about RegTech, it's about cyber protection, and it's about the central bank and regulators understanding better the changes coming through society. I think second was that finance should really be the servant of society. And so we really grounded the work thinking, how's the economy moving on? What does that mean for finance? And therefore, what does it mean for the central bank's agenda? And then third, we thought a lot about the underlying transitions in society, in particular climate change, and what's the appropriate role for the central bank in responding to that, but also thinking about demographic change and the role of Britain in the world. So at one level, a ludicrously wide mandate, and at times bewildering in scope, and certainly one of the most challenging things I've done in my professional career, but really one which the Governor was important. And the good news is, over the course of the year, we had over 60 people at the bank work on this, and the bank published on the same day the report came out what it was going to do differently. And I think it's been very encouraging how many steps the bank and the Governor have taken forward on these topics, which we'll talk about.
Yeah, I want to get to those next steps. I think the 5 major initiatives. I'm glad you describe it as a ludicrously wide report. I was going to describe it more as a very wide in scope and at the same time very comprehensive in detail. And I think it was impressive how forward-looking, in particular, the report is. I think it would also be remiss of me not to mention the appreciation that the IF has for the engagement that we had along the journey and as part of your research. I think it's actually a year ago today that we convened a roundtable together in Bali with a number of our members at the time of the last IF annual membership meeting. So thank you for that opportunity and congratulations on a great piece of work. Let's scratch the surface on a few of the very broad range of items. And we're going to do so with reference to a couple of the great charts in the report. And perhaps if we can load the first one of those up there. I want to start with the topic of payments. And one of the most striking trends we've seen has been the shift away from cashless. Sorry, let me go back one there. There we go. The shift away from cash and towards a more cashless or cash-light society. And if we look across some international comparisons here, obviously the Nordic countries are leaders, which I don't think will surprise anyone. But your report identified the UK very much as a fast follower. And interested in your thoughts on what's driving this trend, not only in the UK, but more broadly, and what might be some of the most significant consequences?
Well, look, there's a couple of things. I mean, everyone in the room knows that payments is the battleground for banks, payment firms, big tech, fintech. And, Libra is just one example of that. And I think we try to atomize it into a couple of different areas. One is kind of defense, offense, and then sort of platform for innovation. So on the defense side, I was asking the question, how many years behind Sweden are we in this journey? I think that you've lost the chart there, but in the last decade, cash transactions have fallen by 80% in Sweden. And so I was obsessed, how far behind Sweden or Norway are we? And our work suggested we're probably only 4 to 6 years behind. And I think that those of you who know Sweden well, you're starting to now bump into limits, whether it's rural communities, some disadvantaged groups, and what you do if the lights go out. So one stream of work was thinking about what is the minimum viable cash distribution system which would be appropriate to serve society so everyone has access to the economy. And so we did a lot of work thinking about utilities through improving access. A second area was really thinking about digital payments and the challenges. And I think the pace is at an extraordinary rate. We spent time thinking about what we can learn from China, what we can learn from Sweden and Norway. But one of the probably more eye-catching pieces of the work was we're thinking in this world where payment companies are trying to reduce friction, what is the role of the central bank as a platform for innovation? And for me, it broke down into a couple of areas. One is messaging standards. The bank and other regulators can play a really important role in enhancing the quality of messaging standards, because that's the clear thing which reduces friction. And as I look through many blockchain pilots, that's typically one of the big lessons. The second, though, is should payment firms have direct access? And so the bank has committed to have a consultation where the payment firm should not only have direct access to the main payments engine, but also leave their balances overnight. And if so, it would be the first central bank in the world to do that. So we are trying to think, but defensively and offensively. We obviously spent a lot of time thinking about blockchain, distributed ledger, and so forth, and I can give you my views on that. But fundamentally, I think a central bank digital currency raises some really profound issues for a central bank. We normally have a two-tiered system. The central bank is the wholesaler, the private sector distributes cash. And to just one example, if you wanted to have a central bank digital currency, would you like every member of society to have a bank account at the central bank? Well, do they have even the capabilities to do that? So there are some really profound questions, not only about the structure of the system, but financial stability, about access to cash. And so I erred away from that, and rather thinking, how do we make the current system better and allow the private sector to innovate, and then back to back with a much better central bank system.
And I think if you look at some of the leading thinkers around central bank digital currencies, Sweden and Canada are two that come to mind, and they seem to have quite differing approaches in terms of that issue you raise of whether or not it is simply modernising a payment mechanism, moving on from cash that you pull out of an ATM versus that scenario of facing directly the central bank. The greater commonality between the two, and Stefan Ingves talked about this on our podcast during the year, very much thinking of that point you made about what happens in some of the more remote communities. And similarly, the Canadians in the farther northern parts of Canada have the same consideration. And it's, in a lot of ways, we look for opportunities in financial inclusion, but there's also the risk of financial exclusion for people if the likes of broadband connectivity is not keeping pace with where the financial system goes.
Yeah, I think that's a very fair comment. So, and again, I don't want to do justice, but one of the other, whilst I was doing the report for the Bank of England and for Mark, on the back of the work, the UK government also set up a task force around coordinating all the regulators in payments, and including also the folk doing broadband, to think about, where does this go from here? But we if anyone wants to pick up afterwards, we can talk about blockchain and distributed ledger, if you like.
That's the whole holistic ecosystem solution. Let's keep moving, because we've got quite a lot that we want to cover in limited time. Let's turn to cloud. And again, if we can pull up the slides there, there's a great chart you have there, and I think this is very relevant for the data town hall discussions we'll have through the afternoon. Excuse me if I can navigate this correctly. There we go, a bit of user error there. Cloud is obviously an increasingly critical enabler for effective data management and analytics. You've highlighted the level of expansion, which admittedly is coming off a reasonably low base to start with in the financial services sector. As a highly regulated sector, we have been lagging perhaps some other industries. But you've mapped out quite an impressive level of anticipated growth, even in the low scenario identified in the report. The report also talked about removing the barriers to cloud adoption. What do you think can be done to help here?
Well, can I maybe just take a step back? So I was asked to sort of think about the next sort of 5 to 10 years, and also think about, how's the structure of our system changing? And my strong sense is, for a bank to build its own data center these days is almost madness. Why wouldn't you use the scale of one of the large cloud providers? And I think number two, and I'd be interested in views in the room, but in a world where firms need to adopt scalable solutions, cloud, machine learning, APIs, what have you, the marginal cost of producing a financial product is close to zero. So with ever finer margins, the only way to preserve profitability for institutions is to really enjoy scale. And if you think about, let's say, Schwab and Fidelity putting zero costs of equity trading in the last 2 weeks, or the cost of an ETF falling by about 85% over the last decade, the marginal cost of financial services is falling, and as a result of that, you need much more scale. So that's fine for the top 3 or 4 players, but one of my concerns was, what does this do to the financial stability of a mid-sized bank? How do they respond to a world of ultra-low margins, but with an old tech stack? And I think my response was, they need to be allowed to scale up. Now, some of that scale could come through M&A, and I'm sure there'll be some of that. But the second is you borrow best-in-class scale. And cloud as a platform for innovation, it was really important. And I think in particular, what I saw was a real inflection. When I met the cloud providers, they are now prepared to change some of their standards to really be at a level of quality which we financial services demand, and a certain governance framework which fits. And quite frankly, it also allows you to actually work with fintechs and collaborate and innovate in a much sharper way. So for me, it was a platform for innovation. And as a result, you need what we've recommended, and the bank we're putting out in October is a new cloud framework, thinking through what are the right standards, procedures, fallbacks. You know, at the back of one's mind, regulators are going to be appropriately concerned. Let's imagine if 90% of the entire banking system in the UK was sitting on 3 American cloud providers. What does that mean? And so there is, I think, an appropriate question for regulators to game through what levels of control and oversight would they like to have for the back end of their banking systems.
Yeah, and I think to that, at one point, is the distinction between concentration and resiliency. And they often get conflated, and they do overlap, but sometimes a solution to one of those may actually further complicate another. I want to continue with the data theme, and again, if we can pull up another slide we have here, which might be one that's a bit more comforting for people in the banking industry. But a big emphasis in a lot of our discussions this afternoon will be on data sharing frameworks, including open banking. And obviously, open banking's been a significant issue where the UK has been a leader in implementing that, albeit the consumer take-up is still gradual. But it is, of course, all about trust. And I thought this was a really illuminating piece out of the report, highlighting that the level of trust is very much weighted towards incumbent financial institutions and with their traditional record of having protected, secured customer data. Interested in any thoughts you have in this in terms of how banks can best utilise the position of trust that they have for the good of the wider economy?
Well, I mean, there's a couple of different things here. So one is obviously today, banks typically are good banks and financial services have got very strong standards for data privacy and follow through. So in some ways, their banks have a strong start to work from. But let's be clear, incumbents can get in pretty quickly. I mean, look at Alipay and WeChat Pay. You know, Alipay's got 750 billion customers. That's 7.5 times more than the largest bank on the planet. So let's not underestimate the value of large networks to build customer bases very quickly. But I think open banking, we did take a really good look at. And I think one of the challenges is if you're driving in the snow, if you're the second or third person to go on the road and the snow's compacted, you know where you're going. If you're the first person driving in the snow, it's normally a bit trickier. And the UK, of course, has chosen to go for open banking first. And naturally, there's some teething issues. And so here we are a year and a half on. It's had relatively slow uptake. Again, the IF's done some great work thinking about some of the dimensions here. But the two I'd call out are, one, liability. If the bank is concerned that it is on the hook for things going wrong and the liability framework is not clear, then there clearly is going to be a reluctance to champion forward open banking. And so that's one area where we looked for potential further investigation. And then the second is really about thinking through what is the benefit to the client. If it's just simply looking at their banking account every month or every week and how much coffee you spent, how much money you spent on Starbucks, that may not be enough. Can it fulfill a broader data economy? And so my sincere hope is that we're not just talking about open banking, we're thinking much more about open finance and how the data flows across the whole economy move forward.
I want to get on to sustainability in just a second, but can I get a quick comment from you in the space of RegTech and SupTech, and in particular the opportunities to modernise supervision?
Well, I think on here, at times I was called by some of the governors as somewhat of a disruptor at the bank, and I think it was around RegTech. So we did a little study where we looked at the typical regulator receives the amount of data equivalent to twice the complete works of Shakespeare every week. So conclusion one, it is inconceivable that they can digest that data without having best-in-class tools. And that really means machine learning has to be embraced by the regulatory community. And I think in areas of high-frequency trading, whether it's the CFTC and others, there's some great work being done. But typically in a more slow-paced central bank, it's not an area where it's been on the foot. So machine learning is key. Second, the rule books are incredibly long. If you include all the UK, European, and global rules, the UK rule book is longer than the Old Testament. More importantly, it gets changed every quarter. So again, it's inconceivable that a person running a firm could read that and digest it. So a machine-readable handbook would help. And the third is it's expensive. We had McKinsey do some estimates for us that it's potentially 2 to 4.5 billion just for the reporting requirements for UK banks. So I think the opportunity for both the regulator and the regulated for having a step change in efficiency and effectiveness through the digitalization of regulation was a really key theme. And the governor announced that one of the 5 big initiatives the Bank of England will take forward on the back of this work would really to have an aspiration to be a world leader in big tech. Now, you know, we live in the real world. This will take some time, and it will require budgets, and it will require a lot of cooperation with those of you in the room, or those of you at least who are in the UK. But I think having world-class reg tech should be an aspiration for every regulator around the world.
So I want to change gears a little here and talk about sustainability for a moment. And again, if we can pull up the remaining slide we have. On the transition ahead, and I guess the importance of trying to avoid a disorderly transition, I thought the report gave a fascinating representation of the scale of I guess, the added activity needed in the new clean economy and sources of low-carbon energy. And I thought this was a fascinating chart in particular that just shows how much more still needs to be done. What can you tell us about both the opportunities for the financial sector to grow and to develop new products to help finance the expansion in this area, and perhaps the challenges or the barriers that you're able to identify?
Well, look, I think that's a really broad question in terms of it. So I think as I looked at my mandate in the bank, what is the appropriate role of the central bank in terms of the greening of the financial economy? And I think the governor, along with Mike Bloomberg, has done some incredibly important work through the task force on climate-related disclosures in trying to create the data set. And so the work that I did for the governor was very much building on that, and it took it forward in 3 dimensions. The first was, can we stress test the banking system to think through over the next 10 to 15 years, is it transition ready? And so in 2021, the Bank of England will be the first central bank to do an authoritative exploratory stress test based on TCFD data. The Dutch beat us in terms of doing a stress test, but that's not on TCFD. And I think this is the reason, in part, why we're not the recommendation was not to do it to 2021, was to give the private sector and the authorities involved the time to refine the data sets to make them decision useful, because there's no point just ramming it through without using high quality data. The second was that bank itself should hold itself to the same standards. So the Bank of England will be the first central bank in the world to put its own portfolio and activities on a TCFD basis, putting its money where its mouth is. And then thirdly is really one which, quite frankly, is interesting in terms of pushing the boundaries, which is that the bank's own motto should be to mainstream the mainstream climate disclosure reporting in financial disclosures. And that obviously does go beyond the bank's mandate, but in terms of building that data set is really important to help markets function. And I think coming back to your question, I think we should see this as obviously we all in the room understand the risks of climate change, but also there are opportunities for putting money to work and helping with the adaptation of of many sectors over the coming decade. And so I think having a data set to allow investors, regulators, and companies have a richer view of what the impact of their actions are, I think is going to be a really key component. And I think it's something also I see very much in the investor markets. We were asked in meeting after meeting after meeting to try and help fashion these standards. And I think the role of the central bank to try and help convene and bring together these standards, much like the IIF does, I think was really a very important takeaway for me from this work.
Absolutely. Huw, we've only really scratched the surface of what you described as the ludicrously wide report. We haven't even got on to ageing and demographics or cyber or international cohesion of regulation, all of which were also very significant themes in the report. But to close, if I can get you to spend our final minute perhaps touching on the 5 major initiatives, and you've already alluded to one of being a world leader in RegTech, but what are the 4 other initiatives or next steps that the bank will pursue?
So when I was asked to do this report, I said that I was asked by both the governor, but actually by the head of the Treasury, make it shorter than a previous report, which had 25 recommendations. So I had 24, of which we then clustered them into 5 buckets. And obviously, 1 or 2 of my recommendations did go beyond the scope of the bank intentionally. So the governor, in his the annual State of the Nation speech, his Mansion House speech in June, announced a 5-point package. So first was to be a world leader in digital regulation. The second was to adapt the payment system to the digital age. And those of you who were listening to him yesterday at the IMF, this is a really key topic of how can the central bank actually be a platform to help reduce the friction and fraud in the payment system through messaging standards, what have you. Third was really building open finance, but really thinking about small and mid-sized businesses. How can we help create an open data file and exchange? And in particular, using data standards to try and improve the access for small business finance. Yeah. The fourth was was obviously the climate change. It was to have a smoother transition of the financial system to climate change. And then lastly is enabling the financial system to have the technology of tomorrow. And obviously cloud is one piece of it. In fact, the bank put out on Monday a very interesting study of the use of machine learning by the financial services system. And what they're doing through their FinTech hub is really trying to explore more deeply what are the potential, in the transition from an analog to a digital world, what regulations need to change, what policies need to change, what capabilities does the central bank itself need so that it can invigilate the system in a qualified basis. So it's a very broad scope, and I'm thrilled many of the recommendations came through, but much more importantly, the bank has really embraced, and the governor with his leadership has really taken this forward, both for the UK, but more broadly.
I'm glad you cite that machine learning report, and Tom Mutton, Director of FinTech at the Bank of England, will be speaking on our machine learning panel tomorrow alongside my colleague Natalia Bailey. Huw, we've hit time. There's a lot more insights that you can share, a lot more that we could cover. We're looking forward to the fact that you're joining us again tomorrow on our Stability in the Age of Digital Platforms panel, so we look forward to hearing more of your insights there. Huw will also be joining me on our FRT podcast, and we might get an opportunity to cover a bit more of the ground that we've rushed through today. Please join me in thanking Huw.
Thank you very much indeed.